Hello traders, welcome back to the Forex gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about how you can start copy trading, a powerful way to anticipate in the market by following experienced traders. Now, this method allows you to potentially benefit from the knowledge and strategy without needing to spend hours on analysis yourself. Make sure you watch until the end to learn the essential step and practice that can help you begin copy trading and avoid common pitfalls. Now, what is copy trading? Copy trading is a method that enables you to automatically mirror the trading activities of a chosen expert. When your selected trader opens and closes a position, the same action is being executed in your own account in real time. This approach lets you benefit from another trading market analysis without having to perform it yourself. In practice, you begin by choosing a platform that offers copy trading. You allocate a portion of your funds, then you select one or more traders based on their performance, history and risk profile. Now, the platform handles every trade, scaling in each position to match your investment level. You can pause or you can continue copying at any time. Now, this is basically what the platform looks like. These are the traders and these are their risk scores. This is their top gains. This is their profit and losses of all times. And these are the amount of people copying their trade. This is basically the commission that they gain, at which you split. They get 35% of whatever profits they make, as the case may be. Despite its benefits, copy trading carries risks. Your results depends entirely on the trader you select, and the past performance does not guarantee future gains. Market volatility can lead to rapid losses, so is vital to review performance metrics and adjust your strategy as needed. How to start copy trading. Let's see a step-by-step process on how to start copy trading. Now, starting copy trading as a beginner requires careful planning and a clear process to maximize your chances of success while managing risks. Here is a detailed step-by-step guide that covers everything you will need to know. The first step would be to choose a regulated copy trading platform. There are a lot of copy trading platforms, but for this teaching, I will make use of OctaFX Broker. You begin by selecting a platform that is authorized by a reputable financial regulator, such as your FCA, your ASIC, and your SYSEC, your SISEC. Regulation ensures that your funds are held separately from the company's operating capital and that you benefit from safeguards against fraud or insolvency. You have to look for platform with clear fee structures, user-friendly interface and transparent performance data for each trader. As you can see, OpenFS provides everything. You can see your risk tolerance, your total gains, profit and losses, how many people are copying their account and their commissions. Once you have narrowed your options, you have to open an account and complete any identity verification steps. Ensure the platform also offers easy deposit and withdrawal method in your currency, and confirm that customer support is responsive in case you encounter any issue. After you are done with the step, you will need to the next step would be to evaluate and select trader for copying. Now, the first when you are trying to evaluate your traders, you would have to filter in from a short list of traders based on the criteria you have defined. Now there are some key metrics that you need to include, which are consistency of returns across different market cycles. And as you can see, all time gain, you can see that all these people have been consistent. All time gain, this particular first trader, the prime trader, has made an all time gain of total 34% on his account. You can see this particular trade empire has made a total of 172% gain on his account. You can scan through and see a lot more traders as you go with as you change traders. You see the traders that have made a lot of gains and the ones that have lost a lot of losses. Consistency is one of the key metrics you need to include. The second one would be your maximum drawdown. You have to check the trader that has maximum, a trader with each with his own with his own ratings. As you can see, I open this trader, you can see he has a risk score of 1. They will show you his total gains, they'll show you his maximum losses, unrealized losses. You see the leverage he's trading with, you see his account balance, you can see his activities, you can see his charts, where he started, how much he started with, you can see the steady growth in price, you can see the trades he has taken, you can see how long he holds his trade, and so on and so forth. This is basically how you go through each trader before choosing a trader you would want to use. The third step can be the number of followers or assets under management. You can look for traders with higher assets. With higher assets, you know that he's controlling a lot of funds. You can also use traders with trading style. As you can see, this trader holds trades for maximum of 1 day plus, meaning this guy would be a swing trader, 7 days trade, 5 days trade. He holds trade for a long time. So you can choose your style. If you want somebody that holds trade for just 15 minutes for 1 hour, you choose scalper traders. You just need to go through each of the the trading experts, and observe their information and know the one that best suits what you would want. When you click on each of the traders profile, you just review their details and trading history, and you understand what you want. The fourth step would be to allocate your capital and diversify. You have to avoid putting all your funds behind a single trader. You have to spread your investment across 3 to 5 traders whose strategy and risk profile complement each other. For example, you have to combine a low risk, a long term trend follower with a medium risk intraday scalper, and perhaps a high risk breakout specialist. These are the traders you can decide to copy their trade. You have to decide on a fixed percentage for each trader, such as 30% in a consecutive strategy, 40% in a balanced approach, and 30% in a high risk model. You have to review this allocation quarterly and rebalance based on performance. The fifth step will be to customize your copy trading settings. Now, most trading platforms let you to tweak how trades are replicated. You have to set a maximum trade size to avoid outsized position, meaning if the copy trader risks a large trade, you can use a stop copy condition to halt copying automatically. If the trader's performance dips beyond your tolerance, some platform also allows you to set take profit or stop losses on your copy trades. Experiment with these settings in a demo environment to see how they can affect your overall practice. Adjust them over time as you become comfortable with the platform and your trader style. The sixth step would be to monitor performance and rebalance. Even though traders copy trades automatically, you must review your portfolio at least once a week, track each trader's monthly return, drawdown, and adhere to your goals. If a trader consistently underperforms or breaches your risk limit, stop copying and reallocate to a better candidate. You have to keep your trading journal documenting why you joined and left a trader. Over time, this record will help you refine your selection process and improve overall returns. Now, the eighth step would be to always practice on a demo account. This is very important because before committing a real capital, you have to open a demo account and apply all of the above steps in risk-free environment. Treat it as if it is your real funds which are on the line. This rehearsal will familiarize you with the platform tweaks, chart indicators, and the emotional discipline needed to stick to your plan. Now, once you have consistently replicated your demo success in a live account, gradually transition to your real capital, starting small and scaling as your confidence and results grows. All right, traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. And if you found this video helpful, do not forget to like, share, and subscribe. Turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.